We are live. Welcome to Thursday Night Stock Charts Live, a very special edition. It is St. Patty's Day, and everyone is Irish tonight. So, welcome. Happy St. Patrick's Day. I hope you're wearing your green. And for the first time ever, I'm having a cocktail while on live. This is a black and tan, a mixture of Bass and Guinness Stout. A very, very good and delightful cocktail. Perfect. Okay, let's say hello to people as they pop on. I don't know. Franklin. Hey, brother. Everybody's out partying tonight. It's going to be a slow night tonight. Okay, so today we did an earnings trade on FedEx. And what we did is we sold deep out of the money calls, deep out of the money puts, and the shares are down after hours, not by much. So we're going to make money on this trade, assuming that nothing rocks the boat between now and the open. We'll let those options expire worthless. So what we did is we sold the contracts. We didn't buy them. So the implied volatility of those options, which gets very, very fat into earnings, that will deflate tomorrow. So we take advantage of that fattening out of the option premium in advance of earnings because the speculators drive up the value of the options, and they will deflate tomorrow. And that should be a profitable trade. Fingers crossed. William, I thought there would be like 100 years worth of oil, or is that the strategic? Like this? This is my black and tan. Trader Isaac, I saw your comment after after we logged off before about Brave. I will be switching. Um, I will be switching uh, uh, browsers because I did switch to DuckDuckGo, and they destroyed their own brand in a blink of an eye. So I'll try Brave until they destroy themselves, but not for the same reasons. I'm doing it because I just can't stand the censorship. I'll try Brave and we'll see what happens. But the reason why I use Chrome and Edge for these videos is that I store all my charts, and I can just click of a tab and they all open up for me. So yeah, I get that the banner ads and whatnot are annoying. I get it, but it saves me a lot of time. But maybe Brave has that, and I'll try it out. So great point. 570. Oh, are they dumping oil out of the strategic petroleum reserve? It's not going to last that much. Yeah, it's not going to last that much at all. Very short term thinking. I mean, these people are not. They're not leaders. They're just not leaders. They have no idea what they're doing. Zero in terms of aptitude. Okay, so we have the 200 strike down here on the put side, so I think we're safe on the FedEx trade. Congrats to those who joined in on that trade. Uh, freaking out about what? The strategic SPR? 33 days left? What can you do? It's sad. It's very sad. And you're supposed to only be using it during wartime or crisis. This is not a crisis. This is a man-made crisis. I get you, man. I hear what you're saying. Okay. That was the FedEx trade. So we had the we had Jay Powell come out yesterday and did pretty much what was expected. Um, they raised by a quarter basis point, means absolutely nothing. Anticipation of another 6, 7 rate hikes in 2022, I doubt we'll get 3. And the reason why I say that is because they're not serious. If they were serious about inflation, they would have gone a half percentage point. We're not at war. No matter what they want to say about over in the Ukraine, we are not at war, nor should we. The problem is that we have a lot of neocon conservative uh, Republicans. I'm hammering them too. Mitt Romney, who's not a conservative. Mitt Romney, the worst of the Republicans. Then you have the what used to be the passive party, the Democratic Party. Now they're war hawks, and they want to go to war with Russia. It's insanity. They're beating the drum on war over in Russia. It's beyond bizarre. So the Federal Reserve is not serious, and I could back it up in a moment. I'll show you why they're not serious. Uh, and I think that this headline encapsulates exactly what's going to happen in fairly short order. I don't know about the next 6 months, but what they're doing right now is the markets are reading the tea leaves, and they rallied today partly because they think the Ukraine issue is going to go away. I don't think it is. I don't think we're going to let it go away. They want war. They want war. And it's not Syria, it's not Libya, it's not even Iraq. This is a near peer. And we couldn't even get out of Afghanistan with our heads held high. So what this writer was saying here is that what the markets are anticipating is that yeah, we'll give you a couple of rate hikes, but they're getting ready for you see, if we see a war over in Europe, you're going to see spending like you have never ever seen before in your life. We will triple the national debt within a couple of years. We will triple it. The worst of all worlds, paralyzed Fed will move too slowly to raise rates. This is a different take on the Fed's action. I agree with it. And what this guy is reflecting upon is that in the past, the Federal Reserve has waited too long to act. And when they did act, they went too far, too fast. So they acknowledged that we had transitory inflation about a year ago. They did nothing, zero. What they did do, excuse me, they did zero to fight it. They did everything to inflate it, make it worse. My analogy that I've used is that they are pretend your house is on fire, God forbid, and that fire is inflation. The Federal Reserve is the fire department. They come pulling up, they take out the hose, they open up the spigot. Rather than shooting water on the burning flame of inflation, they shoot gasoline. That is what they have done, literally. I am not being hyperbolic, literally. And I could prove it. I could prove it. So on the week that since the first time since 2018, the Federal Reserve has raised interest rates by a quarter basis point hike. Quarter point. The Fed funds rate was at a quarter point. It is now a half a percentage point. Inflation is at 8% using current CPI data. You want to go back to the way we used it in 1980, it's twice that, 15, 16%. No joke. What did the Federal Reserve do the week that they raised rates for the first time in years? Well, look at their balance sheet. After pausing for the two prior weeks, new all-time record highs, we are now standing at the doorstep of $9 trillion on the Federal Reserve's balance sheet. They are monetizing the debt. As much as they say they're not, they are monetizing the debt, meaning Congress spends it, the Fed prints it. They're financing it. They're monetizing the debt. And for context, when this all began back here, the great financial crisis, the Federal Reserve's balance sheet was at around $800 billion. Think about it. $800 billion. Look at it now. On the doorstep of $9 trillion. It's utter insanity. It's insanity. And they're not going to stop anytime soon. For those joining in, happy St. Patrick's Day. Okay. So they want war. How do we know they want war? Well, I may get banned for this, but this company here, Silencio's this lady here. Now, this is not a right winger. She's very, very left wing, very, very liberal, to the point where I don't know if I could trust her. But she spoke the wrong words. Mitt Romney accuses her of treason, a charge punishable by death. They banned her video. I don't know why. Why? The following content has been identified by blank blank as inappropriate or offensive to someone. This is crazy. This is crazy. All she basically said is that they have warmongers out there looking for a war. She spoke the truth. So markets are ignoring everything actually happening to focus on what they think will happen. So the markets are thinking about this. We'll get some rate hikes. Then they'll come back in when the economy slows because the yield curve is inverting, and we'll get after they raise rates, they'll cut them again. We'll get another rally up. Their balance sheet continues to rise, so they're not taking that punch bowl away. So the markets are saying, okay, we've seen this before. We know the dance steps. We'll do them. We got you, Fed. The however is that they're not watching what's going on over in Europe. We now have 100,000 soldiers over in Europe. We are ratcheting up the tensions beyond belief with the Russians sending over highly sophisticated weaponry. And you may be thinking that we should defend Ukraine. We have no obligation to defend Ukraine. We have no treaty. They should have had a peace talk with the Russians. They should have stated they would not be a NATO member, and this never would have happened. This is another example of self-inflicted damage done by our so-called leadership. They wanted this to happen. Have no doubt, they wanted this to happen. All the while, the Philly Fed economic data came out today. Prices paid hits a 43-year high. It's no great shock. It's just a validation of what we expected. Inflation is running rampant. But what are we getting out of the Federal Reserve? Oh, they're very, very aggressive. Quarter-point base rate hike. This. We deserve better than this. This. New all-time record highs in the balance sheet. Are they serious? This is a joke. People should be in the streets with pitchforks. Then we have this to look forward to. I've been talking about this for a long time. Folks, as soon as we're done here, get on the phone with your congressman, your senator, your governor, whoever will listen. They want the digital dollar. They want this thing to become reality. This is going through Congress now. Why? Why do they want it? Well, you got to take a look at this. You have this debt here. You have 20 trillion in outstanding debt, including this, but held by other borrowers or lenders, I should say. And you have 200 billion in unfunded mandates. How are they going to pay it? They can't. They can't. But the key to enjoying power is the ability to spend. So what they need is they need direct access to your bank account. Take a look at what Trudeau just did up in Canada. That is sex to these people. That kind of power, that type of control, that it's too alluring. So what they want to be able to do is they want to be able to go into your bank account. Yeah, you had a speeding ticket. They're going to be speeding tickets galore. Cameras everywhere. Oh, we'll just take that out of there. Don't worry about writing us a check. We're just going to take it. You will no longer, if this goes through, you will have an account at the Federal Reserve. The people that should be pushing back on this are JP Morgan, Wells Fargo, the big money center banks, because frankly, they're not needed anymore by the consumer. And where are they going to get their deposits from? Ether? So you'll have a direct account with the Federal Reserve. Now, what if the economy slows? Normally, the Federal Reserve would cut rates, spur spending, but what if they're at zero and they can't cut rates? Well, all they need to do is put an expiration date on your money. If you don't spend it by XYZ date, it evaporates into the ether. It no longer exists. So they will force you to spend the money to create growth. In short, it's utter slavery. You will have no more freedom. There will be a social credit score. They're loving what's going on over in China because China has tied your spending to the quality of person you are. Think about some bureaucrat, some create nothing bureaucrat out there deciding what makes you a good person and applying a score to you. Granted, it's not going to be a person, it's going to be an algorithm, but the person, that sick son of a bitch, developing that algorithm, what's in the back of his or her mind of what a quality individual is. This is going to be bananas. So you got to start. You got to buy physical gold. You got to buy it. I pulled the trigger. Been buying it up. So you got to buy it. Bitcoin. They're coming for Bitcoin. I'm dollar cost averaging a little bit into Bitcoin each week, but not much because they're going to control the on and off ramps. If you want to buy it, you just want to sell it, they're going to control that. So it's basically what Franklin Roosevelt did to gold back in 1934, I want to say, when he made it illegal to own gold. Now people didn't turn in their gold; they still kept their gold, but it was very difficult to sell it. It was very difficult to buy it, so you had to hold it until 1971, until it was legalized when Nixon took us off the gold standard. So you got to own physical goods. You got to have physical goods. Seeds, buy seeds because they're going to control what they want you to eat. Also, uranium. We're long of uranium now with what's going on over in Europe and this new arms race. Uranium is going to go up. Let's bring up a chart of it today. Up 7% today. Here's your monthly chart. So I was asked last night, who was that asked me about it? Uranium. I forget who asked me about it, but it's looking a lot better today than it did yesterday. And if you take a look at uranium on a monthly chart, this is a massive breakout. That's a beautiful chart. That's going up higher. Why is it going up higher? You have idiots that are running the country. All right, let's go over first. Let me say hello to people that checked in late. Hey, Paul, welcome. Trader Isaac. It is one uniparty, no doubt about it, pal. Too many rhinos, not enough. You bet your bottom dollar. Very well stated. Hey, Talon. I remember hearing from an energy expert. If a football field represented all the known crude in Alaska, they could run the U.S. for a whole year. Okay. Yeah, and they don't want to touch it. It's crazy. It's crazy. Uh, you know what it is. I'm not saying she's lying. I'm not. From what I've seen of her, she seems to be a reasonable person. However, she's taken certain positions, and this is when I first heard about her, that are very, very left wing and nowhere near where my head's at. You know, maybe she got red pilled for all I know. It seems that's the way it is, because the way they're attacking her now is incredible. I'll put it to you this way: now that you have Mitt Romney attacking her, now I trust her a lot more. She might be wrong, or yeah, and that's okay to have different views, you know. And that's the thing. That's what's wrong with this country nowadays. You can have an honest opinion, a difference of opinions, but it's the social media has destroyed this country in terms of being able to have an honest conversation with somebody that you have a different opinion of. The silencing is disgusting. It's horrible. The battle was won 2,000 years ago. We knew this was coming. God is God is good. That's right. URA, URA, talent, and that's part of the portfolio. Denny, hey Denny, I'm glad to hear you talk about uranium. I heavily weighted in uranium miners. Good job. Yeah, it's looking really, really good. Franklin, hit the like button. Yes, please hit it twice for St. Patty's Day. In fact, I did a good job with that. I usually screw them up. How does wheat chart look after the dip? 9.86. Let's take a look. Mm. It's solid. It's solid. Still got a lot of volume. Stokes are rising. Good. Let's go to the daily chart, see what it did today. I didn't track it today. So, for those not familiar, we like to use a rules based approach here. If this, then that, right? So, what I would do is, in fact, let's bring up Trend Spider. Let's see if they have any predefined. Still pretty overbought on a monthly time frame relative to the third standard deviation Bollinger Band. Ah, all right. So here, this is their automated trend lines. I'll take it off, and they're picking off. It makes sense. So what I would do is this on this one. Wait for the breakout. A breakout at around 1050. Ideally, open it up on a retest of the breakout point. If you wanted to scratch the itch now, I'd be okay with that. I think we're going to break out fairly soon. Just be aware, though, these Stokes are declining. Let's go back to the daily chart here. I would like to see these flatten out and hook up, ideally. I don't like them down below 50. I got to think about that. So I want to see these Stokes hook up. So no great rush here. And what you do have clearly is resistance immediately above. right there at around 1050. I like that 1050 mark. Here's your trading range. 975, 1050. We break and close above 1050. Game on wheat. Huh. 15% Irish. Yeah, I'm like 60% Irish. The rest is German. Okay, let's do a quick peek at the weekly charts. So what we like to do here, for those new, what we like to do is go over the weekly charts. It's Thursday. We have a good feel now for when how the week is going to close out. But what I always like to say is that you want to keep an open mind. We have one trading day left to go, so we don't want to draw any definitive conclusions of how we're going to close tomorrow out. But we just want to get our heads ready for how we're poised to close out the week, because now we're thinking about what we're doing next week. We're not waiting for Monday. We're not even waiting for Saturday. We're beginning right here, right now, setting up positions for next week. So the way we do that, we want to be educated, and how we're educated is by understanding economic data, how that's rolling out. Earnings season, for the most part, is over. You're going to have some stragglers. And we want to identify how the weekly charts look. Have we bottomed out? Have we recaptured support levels? How do we look? Is this a dead cat bounce on the week, or are we in a new uptrend? So we're going to talk about that now, and let's get to it. First, go to the comments. Man, Bob, you really called the bottom of McDonald's? Yeah, that was a good trade. So we're going to have we bought the options on McDonald's. We booked profits on those pretty quick. We sold puts twice because we opened up a strangle, made money there. Took a loss on the call side. However, we're going to have another round of puts that expire tomorrow, assuming that they expire worthless, and that'll make it a profitable trade. So it's been good. Bob got quiet. What, my audio? My audio's bad? Oh, it's good now. All right. All right, cool. All right, good. Thanks, Franklin. Okay, let's do this. Economic data. Look at this. Empire State Manufacturing Index. Expectation, a rise of 5.5. Reality, 11.8. A negative. Retail sales expected 0.4% rise, actual miss 0.3. Retail sales excluding motor vehicles, folks. Expectation 0.9%, reality 0.2%. Import prices came in a little bit lower. That's because of the stronger US dollar. We'll see how long that lasts. We know about the FOMC decision. Initial jobless claims came in light. That's good. It's good to see people not filing unemployment claims. Building permits, that was a beat. As a matter of fact, we had housing starts hit all-time highs today, I believe, on this report. Industrial production rose. Okay, so a mixed bag, but mostly bearish economic data. And the reason why I'm leaning on the bearish side is that when you take a look at the yield curve, for those not familiar, is a predictor of recession since 1955, wrong only one time. All of these gray areas where you've seen an inversion of the yield curve, you've had major, major recessions and stock market corrections. Here we are. We're on the precipice of inverting yet again. The last time was in late 2019. We know what happened after that. So the economic data is weak. We have a Federal Reserve that's presumably on a rate hike cycle. I do believe they're going to have to do a couple of more of these. You have the 10-year yield on a weekly time frame, very, very strong. Now, what we need to keep in mind is back in 2018, the last time the markets had a taper tantrum, that's when the Federal Reserve was rolling off debt off their balance sheet. Remember they said they were on autopilot? That didn't end well because yields got up to around 2.4, 2.5% on the 10-year. So growth stalled out first. That's your tech stocks. They died out first. And then around 2.4%, 2.5, everything rolled over. Everything buckled. Then the Federal Reserve had to come running back. Okay, we were wrong. Don't worry about it. No more taper. And then you had your next leg up in the markets. So here we are now on the 10-year at around 2.192%. We're right there again. So am I optimistic that this time it's different? No, not at all. This really matters. This is a significant breakout of this massive inverted head and shoulders setup. Left shoulder, head, right shoulder, neckline broken. The TLT weekly chart. What you might expect, the exact inverse of the yield. Left shoulder, head, right shoulder, neckline broken. So the bond market's in a lot of trouble right now, with the exception of tips. What are tips? Treasury inflation protected securities. Why do you buy them? Well, you buy them because you're worried about your money going to zero. So you put them in tips to protect your assets. They are down on the week, but they were a lot lower. We bounced off of support, rallying back. I wouldn't be a bit surprised to see us close positive on the week. Why? Inflation's on a tear. The Federal Reserve is not serious. We already went over this. Look at this rip today. Look at that rip. 1.36% on a yield, bond price. That's crazy. US dollar. So I didn't go over this, but I ought. We have a problem, a major, major problem. Since around 1970, 1971, we had an agreement with the Saudis that they would only accept the US dollar as payment for their oil. What did they get in return? Military protection. That agreement is breaking as we speak. If they, in fact, agree to accept yuan, the Chinese currency, as a method of payment for oil, that breaks the back of the US dollar, the petrodollar. So why is the dollar down on a week where the Federal Reserve raised rates for the first time in years? Look no further than the petro one. So we are down on the week by about a half percentage point daily chart. Lower high. If we break back down and close below 97.50, the dollar's in trouble. Now, I don't think it's going to happen like this. So what's the trade here? What is our trade if the dollar, I have schmutz on my glasses. If the dollar goes into free fall, you want to own commodities, folks, because remember, commodities are priced in US dollars. At least they are for now. So what is in fuego right now? Gold, silver, uranium, wheat. These are your new tech stocks. For the next couple of years, these are your new tech stocks. The VIX. Significant breakdown on the week. but we're still elevated. We're in the mid-20s. So we're not out of the woods yet. We're holding support. And at last look, I had an alert fire off after hours that the VIX had broken out of a 15-minute base. Yeah, it did. I set it here and it broke out. So equities may be under a little bit of pressure this evening. Yeah, we're down on the NASDAQ after hours by about a half percentage point. May mean nothing. It's way too early to draw any conclusions. Okay. So the VIX pulled back. It's going to be interesting to see how we close out the week. We knew that there were problems here on the VIX because we were putting in lower highs on the Stokes, and ultimately the rug was pulled out from underneath the VIX. And I think it was more to do with the Federal Reserve finally saying quarter point hike, no worries about a half basis point hike. So it was a buy the rumor event for equities, buy the news event. Now, this is one of my favorite charts. The Dow transports are in fuego this week, up 8.87%. This is really a beautiful chart. But what I think it's being driven by is, what is that symbol? My railroads. Let's bring up the railroads. The railroads are ripping right now because you don't have that Keystone pipeline, all these pipelines that Biden failed to deliver on. We have to import the oil, and it has to get transported. How do you transport it? By the railroads. So the railroads are in fuego. What I do want to check up on as well, I mean, this could be bought. You pick your favorite railroad, it could be bought. The airlines, they're bouncing this week as well. I'm not ready to buy them yet. But we will be eyeballing them. The Dow Jones weekly chart. Thus far, we have recaptured support. One trading day left to go. A lot can happen here. So I'm not going to be the least bit surprised. And in fact, if in fact we do close above this resistance level here, we're probably going to retrace in the next few trading days to see whether or not what was resistance is now support. That's the backbone of technical analysis. I hate these Stokes. This is why I'm suspect of this rally. When you have Stokes declining down below the 50 mark, rallies tend to fade. It happens over and over and over again. So don't get lured into a false sense of security just yet. There's a lot of backing and filling that needs to happen here before we get another leg up, if we get another leg up. We're going to be running into resistance effective tomorrow. And take note of a lot of these charts. You're going to have the 50-day moving average, which is declining now, right? You've had your death cross, and that is going to act as a declining ceiling for equities. So what normally happens is that you get a rally initially into that declining 50-day moving average. You get a rejection. You get a higher low if, in fact, the stock market is done going down. Then as you pull back, you begin to base, consolidate, setting up for another run higher. You get the 50-day moving average, it flattens out. And then it makes it a lot easier for that next run up on equities to break through that resistance level. So you saw that here, in fact. We rallied, rejection, pullback, higher low, rallied, a couple of more rejections, but ultimately resolved to the upside. That's probably what's going to happen here. I would be shocked if it didn't happen here. Why? Equities are still very, very expensive. They're more expensive now than when I said they were expensive last Sunday night when we took a look at the Schiller PE ratio. So it's not as if stocks are cheap now. They're more expensive this week than they were last week, and we were overvalued last week. So that you have inflation on the rise. I'm not saying that certain sectors aren't going to outperform, but I'm very, very skeptical of growth stocks, especially when you have the 10-year yield with a massive, massive breakout and going higher. S&P 500, very close to a breakout here. Stokes are okay. We'll see how we close out the week. Volume is going to come in about average. Daily chart. So again, we have the declining 50-day moving average. Volume today dropped off. It was light today. So that matters. It's significant. Small caps. Nice consolidation here. At current, we are above resistance. One trading day left to go. Let's see whether or not we close there. That's what matters. Daily chart. Strong day. Very strong day. We recaptured support. But look at the volume, folks. This is not good. This is not good. This is not institutional accumulation. This is not JP Morgan, Goldman Sachs jumping in and buying a basket of small caps. These are your hedge funds trading and retail. So be careful. This could be a bull trap. I'm not saying it is. It could be. Trip Qs, of which we made a ton shorting this time around. So the Qs, nice week, up 6% on the week on volume. Daily chart. We're going to need to see a pullback here. I'm probably going to be looking to short the Qs very soon. Maybe with naked calls. I'm not going to take a heavy position, but we're going to look to short the Qs. Ideally, we get another spike up, and we'll lean into the short side. So members, you can see where my head's beginning to go for next week. I can't say the name. Rapsuka. Okay. Is it possible to zoom those charts? Zoom as in Zoom, the video conferencing software, or drill down? I can't do that. I can, but it would distort too many charts if you want me to do that. Maybe on your side you could blow out your screen if that's the issue. The banks, weekly chart. The banks are looking solid here. We have a position right now. It's called a strangle trade on Goldman Sachs. Sorry, brother. Oh, Donnie, if you scroll down to the bottom right of the corner where Bob is, you see a broken square. Click that. Get a full screen. Oh, cool. Thanks, Danny. Bob, I would really appreciate a Saturday video explaining Stokes if you can fit it in. Yeah, it's going to be a detailed video, so it may take me some time to put that together. I take the Stokes very seriously, so I want to make sure that he's on the phone, that I address it properly, and I want to keep it simple. I can get a little bit too wonky at times, too technical, and I want to oversimplify it as best as possible. And for me, that's extremely challenging, but I'll try it. Just think of it as a momentum. It's a momentum indicator. I don't even care about overbought, oversold that much. Back to the banks. It looks as though we are flagging out here, getting ready for a big, big breakout. Now, I mentioned that we're into Goldman Sachs now. I may be buying Goldman outright. Yeah. So what we did during the big sell-off in the market is that we took advantage of the very expensive options on Goldman Sachs, and we sold deep out of the money 260 strike puts. That's a bullish bet. And I also sold, what were my strikes on the call side? I forget what my call side strikes are. Um, but I may just buy the shares and create a covered call. See how we close out the day. I hate this declining 50-day. I'm in no rush. All right. More to come on that, members. Technology. Wow. Beautiful chart here. Outside reversal bar, bullish key reversal, all that good stuff. Daily chart. No volume today, man. And we've been flirting with a major breakdown here, but we've avoided it. Here's the neckline. Left shoulder head, right shoulder, neckline down here. The semis, weekly chart, beautiful week. On volume, good stuff. Daily chart, good day. But tomorrow you're going to have the 50-day cross down below the 200-day moving average. That's going to happen as sure as God made green little apples. So beware. We're probably going to get a down day tomorrow. Biotechs. We did very, very well with the biotechs. We have been selling puts, buying the shares. We did very, very well with the biotechs, LABU in particular. We're probably, if we close this bullish on the week, we're probably going to roll up some puts that we have to around $15 a share, maybe $14.50. It'll give ourselves some room, assuming that we close this strong or better, and allow the shares to get assigned to us. We'll take the shares and we'll own them because I think we have a bottom here on LABU, and we're ready for a leg up. A lot of technical damage has been done, and we're looking really good here. Rock solid. Look at the volume. All right, let's skip a couple of these. Go to energy. We're down on the week. No great shock. It needed a rest. Down on volume. We may get another week down. Stokes a week, trading down below 50. I think today was a dead cat bounce. Be careful here buying energy. I don't like the setup. I think it's going higher, but I'm not confident that we have done this brief correction on energy. Oil, weekly chart pulled back, holding the 200 period moving average. All the moving averages are going in the right direction. Oil is black gold. So it will be going up higher. Not ready to buy it yet, but soon. We're very close to the end of this correction. Emerging markets, big bounce back. Why? Well, look no further than the dollar. The dollar got weak. Emerging markets picked up steam. Gold. Gold is down on the week, but we expected it. I mean, this was unsustainable, the prior rally. So we pulled back. We're down a little over 2%. Daily chart. we're probably going to pull back yet again on gold, do a retest of recent lows, and then you got to own gold. You got to own it. Our gold mining trade, we're down on the week, but well off the lows. I mean, this is a beautiful breakout. So, and even our little egg company is up 14 and a third percent on the week. It's a good week. So how did we do throughout this entire sell-off? The S&P 500 is down on the year. We're vastly outperforming the S&P 500. Vastly outperforming it. So let's do some charts, and I'm going to log off. And eat corned beef and cabbage. Okay. We go to the members area, see if I have any requests. We have about 8 minutes to go. Sorry, folks. Should have been ready. Log me in. There we go. Okay. Ticker cloud. I don't think we have anything new. Okay. No requests. Did anybody throw any requests in there? I'll take a couple of requests if you want to. I want to go back to I'll wait for any responses, and I'll take a look at some of the alerts we have set up here. Amazon, what did that do? I did a video it broke out. I did a video on it last night. It's on YouTube. BA is a good one to go over. That's a very good one. Amazon looking great. Really, really good, Amazon. Big breakout here. Major league breakout. Look at the Stokes. Higher lows, breaking out. Love it. BA. It closed at 190. That's critical support. Very strong price action here. We had broken down last week, recaptured support this week. Daily chart. Very nice. If we close out the week above 190, I think Boeing is a buy, and I may be buying some myself. So members, I'll send out an alert on that. Was there any indication PIK was going to have a secondary run in it after a big spike pre-market? I could take a look. I'm not exactly sure of the question, but I'll try to figure it out. Maybe Thinkorswim would be better for this. So this is your first spike, and then you're referring to this spike here, and you're asking, was there any indication that would occur? Just let me know if that's accurate, and I'll come back to this. Yeah, SILJ looking really, really good. Closed up nearly 2.75% on the day. On volume, it's under accumulation. There's nothing not to like here. We're now positive on the week. We're getting ready for a big breakout here. A big, big breakout on silver miners, gold miners. You got to own them. Got to own them. Got to be part of your portfolio. Do you think the U.S. can run out of oil? Not in our lifetimes. Not in our lifetimes. We got plenty of oil. I mean, there's oil down in back in was it 2008? I want to say the last time we had a big spike in oil. When was that? Yeah, that was back here, 2008. Yeah. Um, the Brazilians found a major oil field offshore, and that alone could last 100 years. It's crazy how much oil they found down there. So there's plenty of oil. All this talk of peak oil is nonsense. Those are your Green New Dealers with their doom and gloom. Okay. All right. So I'm going to go back to NASCAR's question, and I'm going to say goodnight to everybody. Uh, was there any indication of a spike? So, oh yeah, yeah. Well, I think that spike. I think that the strategic petroleum reserves were impacted. Plus, they shut down the Gulf. So yeah, no doubt. But that was in 2004, I believe. 2005, the latest. All right. So to answer the question, was there an indication of a secondary spike here? Yeah. This consolidation was your indicator. And when you get this, a spike up and you trade above the third standard deviation Bollinger Band, yet you don't pull back, you just trade sideways, that is a major clue that all the market is doing is digesting any shares that are put on the market. No big sellers out there. If there is a big seller, there's a big buyer to take them in. So all it was doing was absorbing all the shares that were put on the market right through lunchtime and then into the close. Your funds came in and gobbled them up. They knew the deal. So here's your rising upper band of support on a 15-minute chart. A little bit sloppy after hours, but this was a beautiful higher low. Really classic textbook stuff. And here was your buy signal here. Bam. Breakout. They didn't even give you a retest. How rude. Good. Thanks, Paul. Uh, hey, Louis. Hey, brother. Happy St. Patrick's Day. Peak also did have a legit news catalyst, a Disney calibration, lots of small caps seeing false breakouts at the open. Oh, yeah, that not just small caps. It's large caps as well. That's a classic. That's a classic move by uh, traders, is to lure the retail investor in to provide liquidity so they could sell. Never, ever chase the bright green futures. Never, ever. Don't do it. You'll get burned. All right, folks. Thanks for being here. Everybody have an awesome evening and have a happy St. Patrick's Day. Thanks for being here. Click that like button if you would, and have a great night. Be well.